Hey everyone! Welcome back to our channel. Today, we're diving into a company that has completely transformed how we travel. Airbnb. With its innovative business model, Airbnb has changed the game, but is it still a good investment in 2024? Is it riding a wave, or is there trouble ahead? Stick with us as we explore Airbnb's story, its financials, its strategy, and its future. You won't want to miss this. Let's start at the beginning. 2007, San Francisco. Two roommates, Brian Chesky and Joe Gebbia, found themselves struggling to pay rent. Faced with a problem, they decided to get creative. A design conference was coming to town, and hotels were fully booked. They saw an opportunity. Why not rent out their living room and offer air mattresses to guests? That's how the concept of Air Bed and Breakfast was born, an idea that seemed absurd at first, but soon, they had 3 guests staying in their apartment. It was a small start, but it planted the seed for something much bigger. In 2009, they were joined by Nathan Blecherczyk, who helped them turn this quirky idea into a tech-driven platform. Together, they launched Airbnb with a vision: to create a marketplace that connects people looking for accommodations with those who have space to share. Airbnb didn't just sell rooms, they sold experiences. Instead of staying in a generic hotel, travelers could live like locals, enjoy unique homes, and discover hidden gems. This was a game changer in the travel industry. But Airbnb's early days were far from smooth sailing. Imagine trying to convince people to let strangers stay in their homes. It was a tough sell. In fact, by mid-2008, they were struggling to stay afloat, and funding was running out. Desperate for capital, they turned to some unconventional methods. During the 2008 US presidential election, they created limited edition cereal boxes called Obama O's and Captain McCain's. This quirky marketing stunt raised $30,000 and caught the attention of early investors, including Y Combinator. From there, things started to change. In 2011, they raised $112 million in a Series B funding round. They expanded rapidly into Europe, Asia, and Latin America, and by 2013, they were valued at $2.5 billion. But what really fueled this growth? Let's break down Airbnb's growth strategies that helped it scale from a quirky startup to a global giant. 1. Supply without ownership. Airbnb chose an asset-light model, meaning they didn't own any of the properties listed on their site. This allowed them to scale quickly without the heavy burden of real estate ownership costs. 2. Leveraging technology and data. They built a platform that was easy to use, and they constantly optimized it using data analytics. Every user interaction helped improve the platform, from search algorithms to pricing recommendations. 3. Creating a global community. Airbnb marketed itself as more than just a booking platform, it was a community. They encouraged hosts to tell their stories, share their passions, and offer personalized experiences. For partnerships and localization, Airbnb partnered with local influencers, tourism boards, and organizations to boost credibility and adapt to local markets. But with rapid growth came new challenges. Airbnb has faced its share of controversies. In cities around the world, from New York to Amsterdam, it has been criticized for contributing to housing shortages and gentrification. City governments have imposed regulations, fines, and restrictions to control its growth. For instance, in 2021, New York City required hosts to register their homes, significantly reducing the number of available listings. In Barcelona, strict rules were implemented on short-term rentals. Airbnb responded with a mix of compliance and resistance, launching lobbying campaigns and adjusting its business model to include longer stays and alternative accommodations. And it wasn't just governments. Local communities have protested, claiming that Airbnb drives up rental prices and disrupts neighborhoods. To tackle these challenges, Airbnb launched initiatives like Airbnb Plus to guarantee quality and transparency. But are these enough to counteract the backlash? Now, let's dive deeper into the numbers. After a high-profile IPO in December 2020, Airbnb's stock initially soared. By early 2021, its market capitalization had peaked at over $100 billion. Fast forward to 2024, and Airbnb's market cap sits around $85 billion, reflecting both growth and some significant volatility. For Q2 2024, Airbnb reported revenues of $2.5 billion, up 18% year-over-year. Their net income came in at $650 million, highlighting not just growth, but also improved cost management. Their adjusted EBITDA margin also expanded, reaching 38%, up from 30% a year ago. Despite these positive signs, there are concerns. Their P/E ratio remains high at around 50, suggesting that investors are still expecting significant future growth. The question is whether these expectations are realistic given current market dynamics. And let's not forget the competition. Booking.com, Expedia, and traditional hotels are not sitting idly by. They're investing heavily in technology, marketing, and customer loyalty programs to regain market share. Airbnb is not just fighting against regulatory hurdles, but also against fierce competition. So, how is it planning to stay ahead? Airbnb is expanding beyond short-term rentals. They're promoting long-term stays, catering to digital nomads, and venturing into unique experiences that allow guests to book activities led by locals. Focusing on quality. The introduction of Airbnb Plus and Airbnb Luxe aims to appeal to high-end travelers who are looking for quality assurance and unique luxury experiences. Investing in technology. Airbnb is investing in AI and machine learning to enhance the guest experience, from personalized recommendations to dynamic pricing models that maximize revenue for hosts. Sustainability initiatives. To address environmental concerns, Airbnb has committed to becoming a net-zero company by 2030 and is encouraging hosts to adopt sustainable practices. Looking ahead, Airbnb is betting on a continued rebound in global travel and the rise of remote work. They're also eyeing new markets, such as emerging economies where middle-class travel is on the rise. But there are risks. Economic uncertainty, potential new waves of regulation, changing consumer preferences, and increased competition could all impact growth. Analysts are divided, with some predicting significant upside potential, while others caution that the stock could be overvalued. So, what's the final verdict on Airbnb as an investment in 2024? On one hand, Airbnb has built a globally recognized brand with a unique value proposition, diversified revenue streams, and a solid financial position. On the other hand, it faces headwinds from regulatory scrutiny, fierce competition, and evolving consumer behaviors. If you're a believer in the long-term potential of the sharing economy, Airbnb's strong market position and innovative strategies could make it a compelling investment. However, if you're concerned about short-term volatility, macroeconomic challenges, and regulatory hurdles, you might want to wait for a better entry point or look for more diversified opportunities. As always, it's crucial to do your own research, consider your risk tolerance, and think about where you see the travel and accommodation sector heading in the next few years. What do you think? Are you bullish or bearish on Airbnb? Drop your thoughts in the comments below. Don't forget to like this video, subscribe to our channel, and hit that notification bell so you're always in the loop with our latest analysis. Until next time, invest smart, stay informed, and take care.